Again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, April 24th, 2020. As always, please hit the like button, subscribe to this channel, and share this video with others. Your likes and subscriptions to this channel is what keeps me going, so please don't forget to like it. Alright, so S&P 500 is basically right in between the bullish and bearish levels, so it seems that market participants are waiting for something. However, Nasdaq already broke into the bull market, while S&P and small caps are still lagging. We look at junk bonds. I think it's also waiting for the Federal Reserve to intervene again. So this is very unhealthy, I think, but you know what we're gonna do. Treasuries are again approaching new records. Natural gas, possibly, maybe it's bottoming. We'll look at crazy oil action. Not sure what negative oil prices really mean, but surprisingly, right this instant, oil looks kind of ready to go higher. No love for copper yet, still it's in the bear market. We'll look at dollar index and euro pushed towards new lows actually. While gold and gold miners are approaching multi-year, or actually are at multi-year highs and possibly soon will be at all-time highs. And we'll look at Bitcoin as it seems to be on the verge of a breakout. Okay, so as always, I am going to be using my proprietary trading indicators, and these trading indicators are shown on this chart right now, and I'm talking about this green, blue, red, and yellow lines. So what do these lines mean? These are support resistance lines, and they are drawn by calculation. So it's an indicator, so they're calculated by a mathematical formula. So if you could see, if you want this same lines on your chart, you can have the same lines on your chart if you have a TradingView account, and you don't have a paid TradingView account. You can have a free TradingView account. All you have to do is come to MasterChartsTrading.com. That's one word, Master Charts Trading. Click on sign up and sign up for trading indicators, where I'm hovering right now, and then you can have them on your charts as well on TradingView. So I use these indicators basically exclusively. I don't use anything else. You can see there's not even volume, there's no MACD, there is no RSI, there is no other momentum indicators. I used them before when I was just starting out, but I no longer use them because all I need to know are in these four lines, and we can see where the support and resistance is and what we should be doing. Should we be buying? Should we be selling? Should we be doing nothing? So this is one of those situations right this instant for S&P 500. You can see it's S&P 500 futures. You can see it's right between the bullish levels, the blue bullish levels right here at 2938, and the bearish levels at 2632. It's right in between. So some people say, okay, maybe we can just play options because whichever side wins, but that's a possibility. I would rather see a breakout one way or the other, and it feels like right this instant there's just not a lot of conviction which way it's gonna go. Generally speaking, right this instant the stock market is in a bear market. Why? Because we had a collapse below the yellow line, and now we had a rally. So this rally is now approaching bullish levels, and if we see a breakout, a close above 2938, where I'm hovering right now, then I think we will see new all-time record highs. A opposite scenario is definitely possible. If we see a close below 2632, we can see a retest of March lows, at the very least a retest. The way Federal Reserve has been acting, it seems that they would be okay with buying stocks, since they have been buying junk bonds, and junk bonds were never on the shopping list for Federal Reserve. For now, we'll leave it as is. I'm just gonna look at the chart and I'm gonna say, okay, I'm gonna wait. Is it gonna be a breakout into the bullish levels, or is it gonna be a breakdown into bearish levels? Currently, I have no stocks in my retirement accounts. I'm basically in cash because I exited on 25th of February, where I'm hovering right now. But I have no problem re-entering, I have no problem going long, I have no problem buying, but I need to see a proof. And the proof is, all I need to know is to close above 2938, where I'm hovering. So it hasn't happened yet. A lot of things can happen here. You can see we've been trading between, this red and blue levels since beginning of April, since 6th of April, and nothing really resolved. So we'll just need to wait and see. Here's the same chart for S&P 500 ETF SPY. You can see also basically we're trading sideways between the bullish and bearish levels. For S&P 500 ETF SPY, the bullish levels are where I'm hovering at 293.77 and the bearish levels at 263.57. QQQ, on the other hand, the Nasdaq 100, the tech-heavy index, actually has broken out into the new bull market right there where I'm hovering on 14th of April. So this is a very important piece of the overall stock market puzzle. Is this a leading indicator, or perhaps it's a false breakout? There's only one way to find out, and we just need to wait for S&P 500 to go one way or the other. QQQ, the Nasdaq, will not exist in a vacuum. It will do what S&P does. The only question right now is, should we jump in and start buying S&P before it enters the new bull market, because QQQ has already entered the bull market, or should we just wait and do nothing? Of course, you probably know that I would probably just I much prefer to do nothing. As much as possible, do nothing in stock market. Occasionally put on a trade and then just again do nothing. It's kind of like fishing, I guess. You just sit there and you fish, and then, oh wow, you got a fish, but you don't know if it's going to be a big fish or a tiny little fish. You got some fish, right? So it's the same with stock market. You need to basically be very patient and wait for those opportunities, and they do come along. There's tons of opportunities, but you just need to be patient and wait. So the QQQ has already broken out. I am not really buying it yet, but I want, as I said above, I want to wait for S&P to join the new bull market. IWM, the small caps are looking abysmal right now. You can see that S&P is kind of already approaching breakout levels, but small caps are nowhere near. If anything, this would be a short setup. So again, wait and see. Let's just wait and see. I am not worried because I have exited all of my positions on 25th of February for small caps. You'll notice where I'm hovering right now. And from here on, I am outside looking in. I am not inside wishing I was out. So this is a very important thing for aspiring traders, is that you need to know when to cut your losses. You need to know when to exit your profitable trades. In this case, the profitable trade was exited here on 25th of February, and since then there was no opportunity to re-enter on the long side to buy. There were opportunities to short. We decided not to. So we're just gonna have to wait and see what happens. So again, we're gonna be looking at S&P 500 very closely and see which way it's gonna go. Dow Jones is basically doing the same thing as S&P 500. It's kind of indecisive between the two levels, bullish and bearish levels here. So junk bonds, JNK. I was talking to my friend, he's a trader. Here on the 9th of April, Federal Reserve basically wiped out all of the shorts. Short sellers most likely shorted right there where I have an arrow on the 1st of April until maybe 7th of April. Then the Federal Reserve just wiped them out, and you can see where I'm hovering right now on the 9th of April. This is basically a re-entry into the bull market for this very important piece of the stock market puzzle, junk bonds, JNK. So junk bonds are, they trade more like stocks. They're not really bonds, or rather they are bonds, but they are such low-grade bonds that for all practical purposes you can think of junk bonds as stocks. So this is what we're doing. We're thinking about junk bonds as stocks, and we see that Federal Reserve bought them here, and now traders are just like, okay, what happened? I don't know what happened. So I think what they're waiting for is another come down, maybe junk bonds will come down to the bearish levels at around 93.36, and we'll see what happens. Will the Federal Reserve step in yet again and start buying junk bonds? My gut feeling is yes, they will start buying junk bonds, but perhaps they will get cold feet, or I don't know what else will happen. I mean, there's so many events happening in this crazy world right now. A lot of moving parts, and this is another reason why I basically ignore the news. I mean, I read the news voraciously. I'm very interested in the news. I have a friend, he sends me headlines. I used to send it to my subscribers, but there were some issues with that. But I don't trade based on the news. I only trade based on what the chart is telling me. So for this chart, once again, I probably just want to do nothing. If I bought here on the 9th of April, I would just wait and see what happens. But I think the important thing is we're going to most likely come down to around 93.30 here, where I'm hovering. I don't know, sometime in early May most likely. And then we'll see what happens. Treasury is not really doing much, but overall bullish picture. Here's one of the opportunities on the 20th of March. This would have been a successful trade. TLT at record highs, treasuries at record highs are showing lots of fear in the markets, understandably so, because of the COVID pandemic and just complete unraveling of thinking and just the way people are thinking. They're still thinking in the pre-virus terms, and we must start thinking in post-virus terms. Things are indeed changing, and so people who want to survive in this post-virus world, they really need to start thinking of how to do that. And the reality has indeed changed. So broaden your horizons, open your minds. Don't get married to just one opinion. Check your sources. There's a lot of misinformation, a lot of disinformation, outright trolling, just vicious lies out there. So have your own brain, think for yourself and make a decision. Especially if you're a trader, you gotta make a decision. Are you gonna be buying or selling? So this is the decision. All right, so okay, let's see. Hopefully we can get the chart to load and look at natural gas. Alright, I apologize. Here we go. Okay, so connections, internet connection, the most important thing out there. If there is no internet connection, there's going to be a lot of trouble. Natural gas. So natural gas futures in a bear market still unequivocally so. It's a possibility that this action here from March into now, it could be bottoming action. Maybe there's, because I can see there's a low on the 23rd of March, then there's a higher low on the 2nd of April and another higher low on 16th of April. So it's possible it is bottom, but overall it's still in a bear market. So if I was trading it, I would be more interested in shorting this security at around $2, where I'm hovering at the red line. So again, you can have the same indicators on your chart and trade by yourself. Oil. So oil is just very interesting. I have never seen anything like this. I still, hit my head myself several times because I missed this trade. I actually sent this to my subscribers, but for some reason I did not enter myself on the short side here on the 23rd of January, where I'm hovering. You can see the downward facing arrows. Why did I even choose that opportunity? So notice I'm not making it up. Again, these are mathematically calculated lines. So here I was, let's say, on the 21st of January, and I'm seeing that oil is coming down towards the red line here, and there's the breakdown. Oil broke down on the 23rd of January by closing below this level, and this is all I need to know really. Did it close below this level? Yes, that means we should be shorting. For some reason I didn't short. I'm still beating myself up because for the first time, I think ever, in the history of humankind, well, no, let's not say that. For a first time that we are aware, oil actually went negative. So contract holders for oil were paying the buyers to take the contract off their hands, and they were paying up to $40 per barrel. Okay, well, regardless, let's just pretend that this is indeed, let's say this is indeed correct prices, and indeed this did happen. So, okay, right now what we're seeing is indicators are actually not really much, in the sense of even though the price was negative, we can still calculate the indicators. So the support resistance line is right there where I'm hovering at 25.91. I'm going to mark it actually. So if oil breaks out above 25.91, I just put an arrow there, I think we could easily see oil come up to about $40 or so, $46, $47. Right this instant it's still in a bear market, but it was so horrendously quote unquote oversold that a bounce has already unfolded. And now to surprise every participant in the market, I think we could see a close above 25.90 and then a rally higher towards $40. It's a very likely scenario. Another scenario, of course, is a close below $0.58 and then another collapse to negative territory. How likely is that? So negative prices are not sustainable. So cuts in oil production are absolutely necessary. I mean, of course, they can increase capacity, but it takes time to increase capacity for oil. So I think the bigger and just much easier way is to cut capacity, cut production. So most likely they are already cutting production. So we will need to watch, but I think it's very possible that 25.91 will be breached and we can see a rally towards $40. Here's copper, and it's still not getting any love. On the 17th of April here, I thought, okay, because you can see the way indicators are kind of curved down a little bit, and then the price came above the indicators. I'm like, okay, maybe this is the beginning of a breakout. But so far, not really. We just need to wait and see, basically. I'm more inclined to short it right now, if anything. Bullish levels are 25640 right there where I'm hovering, 2.56. Dollar index didn't really do much this week, kind of just traded sideways more or less. But overall, dollar is in a bull market relative to other currencies, so I would be more inclined to buy dollar in the various currency pairs. So here's an example of what I mean: euro versus US dollar. So we see a breakdown right there where I'm hovering on the latest breakdown on the 17th of March, and this is now a bearish security. So every time it comes up above the red line, we short it and close below the red line. So here is another opportunity around the 1st of April, and the latest opportunity, actually very successful, on the 13th of April. Another opportunity to enter was on the 15th of April. So overall, very nice move. This is already, let me see, 170 pips, so very nice move there. And looks like it could continue lower, maybe even towards parity. With the way situation is in Europe, I think if United States is in sort of disarray and disagreement about the response, Europe is in even bigger disarray, because not only they have, different countries, different economies, they have different languages to contend with. So Europe is actually, I think, even more difficult to govern than the United States. Now in the United States we have individual governors of the states, which are kind of doing their own thing, while the federal government is doing their own thing, and sometimes there's not a lot of agreement. So very difficult situation all around the world. I'm still extremely worried about the way things could unfold with the very large unemployment, worldwide, and it looks like we could be seeing starvation in parts of Africa, and large, people migration throughout the world. So this is not a easy time, and we're not even remotely ready for reopening our economies. Gold, on the other hand, is doing quite well. So with all of the monetary interventions worldwide, in European central banks, in Japan, everybody is basically providing liquidity, they call it. Overall, this is a just outright monetization of debt. So money printing, and gold is a decent inflation hedge, and inflation could become a real problem, in the United States, because the way the latest bailouts were structured. For example, the unemployment benefits were increased from the federal stance, by the people could get $600 a week on top of the state unemployment. But this actually beats minimum wage significantly. So current owners of the businesses are simply not able to compete with unemployment benefits, if that makes any sense. So in other words, now the business owners must raise their wages even higher, and by extension they will need to charge higher prices from their clients. So this is inflation 101, basically. If there is a lot of money slushing around, people will tend to increase prices. So dangerous situation once again. If inflation truly picks up, we could see gold go to all-time highs. All-time highs are, I think, at around 1850, 1860, so not that far off. But overall, gold is in a very good situation. GLD, for example, I actually have a position still. I opened it on the 23rd of March. I sold already quite a bit of, I took a lot of profits, but overall I'm still holding it, so we'll see where it gets us. Gold miners are doing quite well as well. Couple of alerts. These are actual alerts to my subscribers at Master Charts Trading. One on 25th of March, another one on the 6th of April. good for 33% gain on GDX, gold miners ETF. It makes sense gold miners are going higher because gold is going higher. So gold miners, gold, decent inflation hedge. And then finally, here's Bitcoin. So Bitcoin, BTC, USD. Here's what I want to point out. So right now, still in a bear market, but notice that a couple of opportunities where basically nothing happened, so they were unsuccessful. And now you can see there is a breakout above the red line, so above bearish levels, and it is now approaching bullish levels. Where are the bullish levels? You can read it off the chart. 8292. This is the bullish level. I think if it closes above 8292, we could see a nice move higher, easily towards 10,000. Who knows? It could go higher. I don't know. But the point of the matter is, right this instant, we're still thinking about shorting. And actually, let me show you some of the previous opportunities. They were extremely successful. So, for example, there's a latest very successful trade, good for 56% gain if you shorted it. So it's possible we will see something of similar nature, and we could see a breakout. Notice also the indicators are coming closer together. The green and the yellow line are now closer than, let's say, they were a few months ago. So this is making things easier to change, for the Bitcoin to change the trend to the upside. So overall, a lot of interesting information. Please, as always, hit the like button. If you have any comments, if you have any questions, leave a comment, leave questions. Once you're done so, please head over to MasterChartsTrading.com, one word, MasterChartsTrading.com. Click on sign up and sign up for one of the services. We currently have 3 different services. Alerts, or basically it's just like my newsletter in which I send opportunities, for example, about stocks like Apple, Facebook, JP Morgan, ETFs like QQQ, Nasdaq, S&P 500, and small caps. We also trade Forex, commodities, gold, and cryptos. So I also send overall weekly discussion, and newsletter is also posted at the internal blog right there where I'm hovering. If you really don't really care about the newsletter and you just want to trade, then by all means get the trading indicators. And the trading indicators this is what I'm talking about: the green, the blue, the red, and the yellow lines. This is all you really need. You don't need anything else. If a security closes above the blue line, we buy it. If security such as Forex, this is a Forex, well, continuous instrument, if it closes below the red line, we short. If it's a stock, like for example S&P 500, then I use the initial breakdown indicator for the bear market, where I'm hovering right there. So S&P 500 entered the bear market the 9th of March, and since then we would be shorting it. But once it goes into the bull market, it would need to go all the way down to the yellow line to re-enter bear market. So this is the difference between stocks and continuous instruments like XAU USD, for example, which is gold. So the other product of course is alerts and trading indicators, which is basically the ultimate package. You get both. You get my trading indicators and you get my newsletter as well. We still have, or rather, we're forming a algorithmic trading interest list, and do sign up for it. Algorithmic trading will be most likely done on cryptocurrencies such as Bitcoin, whatever, Ethereum, and it is most likely going to be done on Binance. So we are still working on it, but do consider signing up for the at least the mailing list, so you'll be the first ones to know, and most likely there will be a discounted money management fee will be discounted. All right, let's see. If you have any questions, again, please send me a message, and then do share this video with others. Thanks for watching. Have another great trading week. Bye-bye.